Hello and good day. Weekly analysis of the silver symbol on January 4th. In the past week, the price collected the buy-side liquidity of the previous week's candle and ultimately closed with a bearish bias. By examining the RSI, we see that the fast RSI has entered the 90 range for the second time, which indicates increased buying pressure and the continuation of the upward trend for silver. It is predicted that the price will have a short-term correction to the weekly FVG area. If this is accompanied by downward momentum, it could move lower and enter the FVG zones at lower price levels. By carefully analyzing the Fibonacci retracement levels, we can clearly see that the fair value gap areas identified in these two specific sections could serve as highly important price zones for rejecting the price upward. Within these two distinct areas, we can actively look for sophisticated trading strategies for buy positions in the market, which are strategically located within the optimal trade entry zone. Even if the price action shows signs of bearish weakness or temporary downward momentum, we can still confidently look for high probability buy positions within this same fair value gap area. The ultimate target for this move is this significant weekly rejection block area. By thoroughly analyzing the daily time frame chart, we can observe that the current price is lingering in a prolonged consolidation zone, waiting for a decisive breakout. In this bearish candle right here, which has been within this range for the last 3 days, it has only collected the sell side liquidity in this area, so it is expected that the price will have a short-term correction to the downside. It may enter this daily FVG zone and after that get rejected from this area towards higher levels where we can look for buy positions in this section. If the price closes below this area, it could enter this daily order block zone and this section right here. By examining the 4-hour time frame, we can also see that the price is forming a triangle pattern and, as predicted, had a short-term correction. It collected liquidity on the sell side here. Ultimately, it failed to break this 4-hour order block zone and had a short-term correction down to the 50% level of the FVG. If we predict that it will continue its downward trend, it will collect liquidity on the sell side here and enter. This area could become a 4-level order block, and if it closes below this range, it can enter. This area is a daily and optimized order block. It has become a 4-level area, and in all these ranges we should be looking for a trading strategy. But if the price collects the sell side liquidity and re-enters the range and closes again, it forms a Ryan Soldier strategy for us, which we can use to set our entry point in this section when the price closes, place the stop loss behind the swing, and set the risk-reward ratio to 1:1, 1:2, and according to the swings. In this section, we determine our target. On the 1-hour time frame, we can see the price, as predicted, kept moving towards the sell side. It collected the liquidity here. It entered the 1-hour order block zone and reached the 50% level of the 4-hour FVG. At this point, it paused towards the buy side. It formed liquidity, so at this point, as predicted, we could enter a sell position. Place the stop loss behind the specific order block zone. Go ahead and set it now. Risk reward. Entering here gives us a target, and our prediction is that the price will have a short-term upward move. Liquidity remains on the buy side too. It collects liquidity here and reacts to the order block zone here, and after that enters the bearish phase to collect the remaining liquidity on the sell side. In this area, ultimately, we can look for a buy position within the order block zone in the market, aiming for higher levels as the target. Also, if it is accompanied by bullish momentum and closes above the order block zone, it can continue its bullish trend and reach higher levels. That's the price we expect for it. Our prediction is that